Hey everybody, in today's video I'm going to be going over this article titled Volta is struggling to stay afloat, cuts 10% of their workforce. Now this article was actually published almost 2 weeks ago on September 29th, and around the time this was published I made a video on a different article titled Volta realigns organization to reduce costs and drive strategic priorities. And I made this video, and basically what this article goes over is all of the ways Volta is restructuring their business in order to cut their operating costs, because at the end of the day, Volta is running out of money. Now, if you take a look over at Volta's balance sheet, we see that as of quarter 2, they reported having $105 million of cash. Now, if you take a look over here, December 31st, 2021, they reported having $262 million of cash. So Volta has basically gone through an incredible amount of cash in a very short amount of time, and that's all pretty much driven by their operating expenses here. If you take a look, they have an incredible amount of selling, general, and administrative expenses, and that's mostly what's kind of driving their total operating expenses here that go ahead and bring them to a very large operating loss. These numbers are something that would be expected for a company that has much higher revenue than where Volta's at. As you can see, they only had $15.3 million of revenue in quarter 2. And if you take a look over at quarter 3, Volta is now guiding for revenue between $13.5 and $14.5 million. So even lower than where they were in quarter 2 this year. So basically, in order to keep up with these declining revenues and to be able to keep their business operating with that dwindling amount of cash that they have to cut down on their operating expenses, and most of that is that selling, general, and administrative expense right here. So that's what these articles here are really going over, is these ways that Volta is reducing their operating expenses so that they're not bleeding through cash quite as rapidly as they have been. So as you can see, this article here basically goes over the same things we talked about a couple weeks ago, where Volta is streamlining their operations. They've announced a 10% reduction in current workforce. They've already reduced 18% of their full-time employees, and they're implementing additional cost-saving plans, including tightening of business processes, consolidating teams, and controlling the marketing and administrative costs. Now, the whole reason why I'm making this video here is because that article that I made a video about in the past left out a very, very important detail that comes from this analyst here. And it says that the biggest priority for the management is increasing the company's liquidity. Volta ended quarter 2 this year with $105 million in cash. All else being equal, we estimate that the company will run out of cash in late quarter 4 or early quarter 1, 2023. Management is optimistic that it can enhance liquidity, but now expect a capital raise to be dilutive. Now, this is really the important part here, is that the capital raise that Volta has been working on for a while now, obviously, Volta isn't expecting to be able to sustain their business with only $105 million in cash, with the level of operating expenses that they've had. So they've been working on trying to raise capital through debt, and they've been working on that for months now. I mean, they were talking about how they've been working on it for a while in their quarter 2 earnings call. So this has been going on for quite some time now. And as you can see, the big piece here is that they now expect it to be dilutive rather than through debt. It seems like most of the lenders out there are no longer interested in lending Volta any money because they're seeing all of these expenses with the the amount of revenue that they have, and they recognize that it's going to take Volta a very long time in order to break even and start turning a profit here. So they're no longer interested in loaning Volta any more money. Now, the concern here is that Volta's market cap right now is at $176 million. And they're either going to need to do massive dilution here if they want to raise, some kind of a significant amount of money that will keep their business going. Or they won't be able to raise enough money, and they'll only be able to sustain themselves for, a short little bit until they're back in the same situation that they are right now. So that's where we're at with Volta. The capital raise is no longer expected to be done through debt. It's now expected to be done through share dilution. So it'll be very interesting to see where Volta ends up going over these next few quarters here. It'll be very, very interesting times ahead of us. So I've got a number of other videos on Volta here on this channel, so be sure to go check those out, and I'll see you guys in the next video.